Hello investors and welcome back to Just Randy Stocks. Wow, this price action with SNDL, I want to talk about it. I want to go through the bull and the bear case. I want to go through what happened and what I heard in the Q3 earnings call. I want to make sure you didn't miss anything that I picked up on, some really important information. And I want to go through the analyst price targets. I want to hit up the charts. We're going to look at the Bollinger Band. For all of that, all I ask is just hit that subscribe button, give the video a big early thumbs up, and that notification bell if you want to be notified when I release videos in the future. All right, the first thing I want to do is I want to take a look at Ticker Terminal because it updated, and look at this number, 14 million. This is Q3. We just reported this. I want to take you back. These are quarterly buckets, and I want to take you back to these last 3 quarters. The first 2 quarters of 2020 and the last quarter of 2019. And what do you notice here? You see the same number, right? 14 million for these first 3 quarters, and then we've got 20 million, and then we start trailing off to where 2 things are happening. We've got an oversupply of flour in the market, and we've got pricing pressure. And how did we accomplish this 14 million? I believe it should have been a little more. I was expecting a slightly larger number, honestly. So, 14 million just seems a little short to me, and they did miss their revenue target. So 14 million, we've got some pressure there. Keep an eye on this to get larger. I know it was only a partial quarter of the Spirit Leaf brand, but I think it should have been a little larger. So we're going to want to keep watching that. The next thing I want to look at is the cost of goods sold. The cost of goods sold, as the revenue increases, the cost of goods sold is expected to also increase. Now, what I like here is even though the revenue increased, we were able to maintain a stable cost of goods sold, which did not exceed what we've seen previously. Matter of fact, it more compares to 2019's number. So that was good to see. I think we've got good control. Now, can we maintain this level of cost of goods sold in the future? So let's take a look at the balance sheet, cash and equivalent short-term investments, and I want to take a look at inventory because there's a few comments that were made during the Q3 earnings call that I believe apply to these lines. Now, the first one is everyone knows that we've got cash on the books. This cash is king, cash is good. You want to have cash, and if you look back here, we haven't had nearly this much cash. So what do we plan on doing with it? Number one, everyone's seen that we got the notification that there's going to be a buyback of shares because the shareholders have been severely diluted. Every time we do a transaction, it issues more equity. That means your portion of the pie, your portion of SNDL, every time they've issued more shares, it's just gotten less and less. So your pie is getting smaller. That's not what you want to see. So they're buying back shares through November of next year, and that's what we want to see happen. That if when we've got extra cash on the books, that's one thing. You also want to see smart investments, and SNDL has been doing a great job, and I expect from the Q3 earnings to see before the end of the year, we could see another 100 to 200 million released out in smart investments before the close of the year. Now, Alcana's got to close, and that's probably going to happen in the second half of December, which isn't going to give us visibility to that revenue, a full quarter of that revenue. So we're not going to see that until later, until Q1 of 2022. Now, short-term investments, that investment pillar, you can see that that's been coming in on the last 2 quarters. Now, the last thing, and this was also said, and I'm talking about inventory, they are making investments in a supply chain manager. They are doubling down on improvements here, and you don't want to tie up a bunch of your money in inventory. And you can see historically, we've had much larger inventory numbers, and we haven't needed that much. We have done some cleanup, and it looks like we've gotten relatively stable down here in the 30 million range. I'll be interested to monitor this and see if we can narrow it down even more and make sure that we're running as lean as possible with a good supply chain manager, especially when we're going to have different facets of the business. We've got liquor, which is much different than flour, and we've got retail with a demand signal. Supply chain has got to be tight. So it looks like they're doing investments in that area. That's what they said during the call, and that's very good to hear as far as making sure that we don't have money tied up in inventory. So the last thing I want to take a look at out of these financial statements, on the cash flow statement, I want to take a look at net income. And you can see we have not been positive. And for the first time this quarter, we were positive. Now, we want to see a positive number moving forward, and seeing how much red we've had in the past, can we pull this off again next quarter? So here's how disconnected SNDL is from shareholders. For some reason, they thought it was a good idea to decouple the results from the actual call. I think they did all the right things except for that. They were ready to announce, and they announced the buyback of shares. And then the CEO was ready to address that they would not be doing a reverse stock split, that they would file for an extension first. And because they didn't do both of those things together, instead of seeing this whole line going up, you've got the line going down. People sold off some of that news. And then they were like, hey, wait a minute, you addressed my concern over whether or not there will be a reverse stock split on February 22nd. Now, I don't think he promised that there wouldn't be one. He just said, and I took it from the call that I listened to, was that, they would do an extension and let the numbers speak for themselves. And because we lost that confidence, you could see that this number is not going past $1, and we've got a downtrend. And, maybe it'll hold here tomorrow. We'll have to see. This looks bearish to me. And in the morning, maybe we get a dip, and then it finds support down here in the 81-80 cent range, and then goes back up to get a little bit of momentum. But I think the only thing that's going to push this past $1 is, another news development. So I think they're a little bit out of ammo right now. And until we do the Alcana transition, I think that's what we're looking at. Middle of December, this number doesn't go over $1 until there's development of legislation, the Alcana transition, or they do something with $100-200 million before the end of the year. Just to take a look at the Bollinger Band real quick, you could see down here is 81. This would be outside of the 2 standard deviations. This might be a good price target to keep your eyes on to see if it does gain some support and starts to reverse. Now you can see after hours, this was going up a little bit, but the candlestick action towards the end of the day did look bearish. So according to Tip Ranks, we've got an 85-cent price target. If you're buying anything over 85 cents, I don't think that's a good value buy. And I just want to remind you about Zachary George, the CEO, that he has experience with numerous corporate board turnarounds around operations. That's what he's done with this business, but they are not finished. Now, a lot of the information that I got for this bull bear case came from the financial statements and MD&A. Now, the MD&A is management's discussion and analysis of financial condition and result of operations. So if you haven't went online and taken a look at these, and also we've got a condensed consolidated interim financial statements which go into a little bit more detail. So what I want to do is share the bull bear case with you, and that's it. We're going to close this down. These are the highlights. Diversification. Why did they diversify? You have to ask yourself that though first. This whole bloodbath with the flower business and oversupply, it's a big deal, but they did diversify. They're doing investments for other businesses, and they're getting into the liquor business to get a sustainable cash flow. Now they've got some of the best grow rooms, these built indoor modular grow rooms that help them create this consistent, highly controlled cultivation environments. They're the best high quality standards. This is important with making sure that they're not wasting money, which has happened in the past. They've talked about how that's improved. Now they've got coverage, 100 franchise locations, and they're getting exposure to more, supply agreements, and future growth, specifically with 9 Canadian provinces and a distribution network that covers about 98% of national recreational industry. So this is important. The acquisition that they did for the Inner Spirit Spirit Leaf brand was definitely important, and the Alcana transition that's going to happen, is also equally important. So that is going to give them that exposure, but more importantly, not only being able to diversify, but approximately 63% equity interest in Nova Cannabis, which is actually a lower, more competitive brand, which is going to help them, and is supposed to be growing so that way they can capture these lower price targets. So they're just increasing their retail brand. They're really going to take advantage of, eliminating the competition with this. So investments in other cannabis industries and increasing their interest rates and, just being smart about investments in general. All right. So there's lots that's happening good. Let's talk about the bear case. So the company is still spending more than it makes. The addressable market for Canada compared to the US is only 10% size. So Canada is 10% size of the US, which would give them the population size of California. And they are not currently having plans to address the United States or, doing big international expansion. So they're doubling down, they're focusing on the Canadian market, which puts them in a $7 billion total addressable market where they have to get market share. And greedy taxation and these provincial structures that are very complex just overcomplicate the things, just make things difficult. And taxing practices can be harmful. And just to show you how big the addressable market is in the United States, it's 43 billion. So it's really important when you're looking for lofty expectations out of a business that you see a really big, sizable total addressable market that we do not have. Now, even though the CEO addressed the NASDAQ minimum bid requirement, it's still something that has to be accomplished and has not been accomplished yet. So they have to get past this, or before this date, February 7th of 2022, they have to close in on 10 consecutive business days where they're over $1 within that time frame. Now they have the opportunity to file for an extension, and I believe they're going to let their numbers speak for themselves. But here's the little snippet or snapshot if you want to go back and take a read of that. Now, the next thing is pricing pressure and value brand exposure to Nova brands. There's an oversupply and there's underground markets. Do you think SNDL is the only one trying to sell flower in Canada? Do you not think that there's underground markets and that this is a niche play? Not everybody, 100% of the people, take part in this. There's probably a large percentage, but it is actually a niche market for those that it applies to. Now, I like the company. I believe it's been an amazing turnaround, but you have to maintain, somewhat downsize expectations until you see how this transition is going to go with the liquor brand. They had a lot of their stores that they were going to close. And if you watch my previous video where I go through and talk about how their financials for this Alcana brand didn't meet up with the standard, like it wasn't reaching the financial expectations of the rest of the liquor market, they had to close some of their low volume stores. And did SNDL get exposure to Nova brand? And that was just part of this deal. They've got a lot of things they got to work on. And in those first stages of getting this synergies and alignment, what all do they have to work on to get everyone on board and get this working like it's supposed to work? So yeah, it might look good at first. Hopefully it does, but there might be some things that they have to work out. That's all I got. I hope this added some value to you and your investment in SNDL. I'll see you in the next video.